This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening. I hope you're having a good one. I'm going to be going over the data sets, the SPY technical analysis, and potentially some other symbols if I feel up to it for October 21st, 2025. And with that said, let's go ahead and jump straight into the data. Now, I'm keeping the data notes the same as I had in yesterday's video, just because currently there's no need to change it. Tomorrow we have a few Fed speakers. Well, just it's showing Fed Waller speaking twice. Um, the business inventories, retail inventories, U.S. leading index. I'm not sure if those are even going to, actually be projected or not, as the government is still within the shutdown. As far as I know, um, currently as of 7:48 p.m. So, with that said, since the government's still shut down, we should expect probably little to no data sets being released other than Fed speakers. We will have the 20-year bond auction on Wednesday, but in terms of anything else for tomorrow, I'm not sure. Now, I haven't been hearing anything really specific from the Fed as of yet. Um, but listening to these Fed speakers this week will be important as we do not have the data sets, but they do. And they can definitely be looking at the data sets at pretty much any given moment. And they will be relaying some of the details of those data sets. Like last week, we had a few of the Fed members relaying how the labor market data is, fairly weak still. And so a lot of these Fed members speaking right now, while generally they wouldn't be super, super important, they could be very, very key because there's, no other data to rely on. With that said, again, the 20-year bond auction on Wednesday is going to be a really big deal, I think, as the long-term yields and short-term yields have been uh, pretty aggressively pulling downward. And we're seeing a continuation of that. So it doesn't look like this is some downward bump in the yield trend. It looks like it's continuing with its downward trend. Um, so we should see that reflected within this 20-year auction. I know the 30-year auction last time, which I believe it was 2 weeks ago, if I remember correctly, did not reflect that very well. It came in very, very slightly above the current rate, which I don't know the current yield on it right this moment, but the auction came in just very, very slightly above it, and that's because the news kind of started to become a little hawkish again. There was a lot of the sentiment of that potentially there was an increase in the um in consumer interest, um which wasn't really happening. There wasn't inflation picking upward. It was just a transitory thing, which I'll be so glad when I don't have to keep repeating that word all the time. But it was just a one-time bump in pricing for the most part. Most everybody, most companies are pretty much done throughout that continued price increase cycle. Now, with that said, uh, yeah, I'm just anticipating the yields still continuing to pull down. Um, as far as we know, as far as what the Fed has been saying, as far as the beige book and the Fed minutes, the previous release, we know that the labor market is still having a lot of contention. So even without the jobless claims and everything being released this week, um, we should be expecting that type of narrative should be increasing, rather than pulling back down, especially when we're seeing a lot of the sales data from a lot of these retailers and everything really starting to slow down. So, yeah, let's get into the technical analysis. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal Gex and Dex market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And getting into the technical analysis, as always, let's quickly go over our daily moving averages and Bollinger Bands. Now, yesterday we talked about how potentially we could see this pull back up, and by this I mean the price, the 5 mile, this consolidation, okay? And we did have a very large buying day. The market price closed at 671.30. Uh, and with that said, the expectation for where the 5 mile should open tomorrow should be around that 666.20, give or take. It might be higher, might be slightly lower, could be a lot higher. I'm not entirely sure right at this moment. But with that said, one thing that is very, very important is that the 5 mile will be pulling above the 10 mile and the 20 mile. Okay, so that is technically creating uh, two bullish conditions because that's generally how you see the um how am I trying to say this? Usually the signals for the bullish upside is when the 5 mile passes the 20 mile and when the 5 mile passes the 10 mile. So while the 5 mile and 10 mile are heavily consolidated right here, the 5 mile is going to pull above both of them at the same time. Now, it is bullish. Okay, let's not sugarcoat that. It is extremely bullish. But at the same time, with the consolidation of the 10 mile and the 20 mile, it does make it a little sketchy because if we do have any form of major selling from this range, if we have a rejection of the upper Bollinger, which is currently at 5 or at 675.59, that will be pulling up if we continue heading upward all the way basically to that 680 range. So, um, if you listened to me in the video yesterday and bought calls, you should be pretty massively up on those and pretty much happily looking for heading up to the upper Bollinger at this point. That cup should close and everything should be good to go if, none of the data sets that we don't have currently or the Fed speakers um, or anything with China or President Trump brings down the market, then the market will continue upward towards that 680 range from here. Okay, and that's extremely, 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 extremely likely at this point. The overnight is not super, super strong, but it is currently at 672, so it is pushing higher highs. Okay, now with that said, Um, the 20 mile for about 1 to 2 more sessions, even with buying on the upside, will start to pull above the 10 mile. Now, that does create a kind of wonky condition where if the market rejects the upper Bollinger really hard up here and pulls down below that price, then the 5 mile will be below the 10 mile and 20 mile at the same time again. And also the 10 mile and 20 mile will be in an even further bearish position because the 20 mile will be above the 10 mile. Okay, so that'll be showing that the 5 mile is below the 10 mile, the 10 mile is below the 20 mile, and the 20 mile obviously is the center. And that would be a very, very large move to the downside. That would be almost a guaranteed move to the lower Bollinger here. So the upside looks very, very good, but don't discount that downside, okay? And we'll talk about that towards the end of this video. I'll probably go over the VIX or something, but there are tools to determine whether the selling is coming or not. So um, let's go ahead and check out the hourly chart. And I'm going to look at the 4-hour chart first off. Okay. So we talked about this, I believe, in last night's video. Um, if not, then it was in Friday's video, how potentially right here can turn into a really strong double bottom. Okay. And so far, that's exactly what's happening. Um, they have somewhat taken the top off of this larger Head and Shoulders. However, we're still heading towards the upper side of this consolidation channel. Okay. And seeing how consolidation channels like to trade from the bottom to the top to the bottom to the top, rinse, repeat, there is a very large chance that we hit the top of the consolidation channel and pull right back down. Okay. And this would cover multiple different things. And let me highlight that really quick. So currently, this is working to fill out this cup. And I know for a fact we talked about that. Now, from this cup, from the top of this cup, and from the top of this channel, we should expect and anticipate some form of rejection, whether it pulls slightly above and then rejects, or rejects basically right off the top of that channel. We should anticipate a soft rejection. Now, whether that rejection pulls down all the way to the bottom of this channel or not, we have no clue yet. We just have to go level by level. So we will basically be anticipating that the 5 mile will be where that range will hit back into. Okay, so currently it's going to be at 666. So let's say around the 668, give or take. Okay, and from that level, you would then create a new cup and it would create the breakout. And that is how you'd get up to that 680 range. That's how you'd push the upper Bollinger with a ton of conviction. That's how you get out of this consolidation channel. So that's extremely bullish. It looks extremely likely. Okay. Now, with that said, on the bearish side of things, is that this is a very strong consolidation channel. This can turn into a double top very, very easily. Seeing how this is just filling previous selling gaps, not really creating new buying yet, as this is kind of a difficult topic to cover in this type of video. But essentially, if these were like Lego pieces, or think about it in terms of math, how you have positive and negatives, each of the red would be either a red Lego brick or a negative, and the green would be either a green Lego brick or a positive. All of the negative here is just currently being counteracted by the positive. So, is there buying or selling really occurring in here? Not really. So that really means that the market price is just simply recovering where it dropped off of. This is what you call a fair value gap, and they're very hard to spot until kind of after the fact. But this is a very, very strong fair value gap. Excuse me. Fair value gap. Now, with that said, the market may not want to be heading up. The market still may have wanted to push up slightly and sell off from that level. We don't really know yet. We just have to see where the structure and everything takes us from here. But it is basically just filling this large gap of selling and buying, and now we're back on the same road again of just chop. Okay. Now, this was bullish chop. This was creating a lot of bullish upside. But again, just be cautious that going to the upside of this channel does create a very, very bearish condition. Okay, and we've seen that happen multiple times now. So yeah, that's the SPY. Um, really pay attention. If they're starting to sell, they will sell down to the 5 mile. From the 5 mile, you really need to see whether the selling sees continuation, and you'll know by looking at the VIX volatility, which is the VVIX. Let's pull that up. This will spike upward very, very quickly if selling is going to start occurring there. Um, you'll also see that reflected within the HIG. Let's pull that up. Within the HIG as well. So if there's going to be a very large selling event, and this was that selling event from the previous days ago, it was reflected very well within the HIG, and so is the buying upward to the upside so far. The VIX volatility, it pulled upward very, very drastically. It pulled all the way up close to the, I want to say 138 range. Yeah, very close to it. And now it's starting to drop back down. It's currently all the way down to the 103. So if the selling is going to continue, this will spike back up very, very quickly. If it's going to taper out, it will pull back to that 88 range fairly quickly as well. So that's a very good tool to determine if the selling is actually happening or not. The VIX currently is still within a somewhat greed phase. As long as it's below the 20, it's considered within the greed area. Fear would be 20 and over. So today was a massive, quote unquote greed day. We did have a high of 21, but again, with us pulling below the 20, it's still saying that the market wants to run pretty bullish right now. Um, we have been seeing the treasury yields pulling back down pretty drastically again. Sorry if you can hear my daughter screaming. She's getting dressed right now and not having a good time. The treasury yields have been pulling back down very, very drastically. And we talked about with the 10-year how that 4.1, 4.2 level was extremely, extremely key, and it has rejected it. So that's a good thing. The treasury yields pulling down is a good thing for the market. It's a good thing for just the economy. It's a good thing overall. Um, so very, very likely we are going to see uh, probably an all-time high on SPY again. It's looking very, very, very likely. And with us testing SPY, or having that sell-off not too long ago, that did create conditions to where we did actually test support pretty well. We were below the 20 mall for quite a bit. I'm going to turn off the moving averages, but we were below the 20 mall for almost a whole week. We did touch the bottom Bollinger. We didn't have a full bottom Bollinger move. We rejected that, but we did touch the bottom Bollinger twice. So have we created somewhat of a decent support range test? Yeah, we have. I think it's very reasonable for us to continue upward at this point, and just going over our buying channel, um, ignoring the selling structure that we talked about. But we're still within this very, very strong buying channel. And as long as we're within this buying channel, the real anticipation should be that we're going to continue upward and going to continue buying. So yeah, we'll see. Um, yeah, with that said, going to end the video here. I hope everyone has a great day, great trading day tomorrow, and just a great day overall. Um, Other than that, thank you for watching my videos as always, and I will talk to you in the next one. Take care, everybody.